Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 22nd of October 2019. So, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay. Also, just before we jump into the chart, quick mentioning of our JFD research page here, which you can always check out on a daily basis. And I believe you can find a lot of useful stuff here. And you can find that, of course, on jfdbank.com website, and just clicking here on the research tab. And it will take you to this JFD research page here, which we update on a daily basis. And yep, like I said, guys, I hope you can find it useful, and I believe that you could. But right now, let's jump into the charts. Now, the first one I want to touch on here is the Nikkei225. Now, I thought I will take a moment here to have a look at Nikkei. The Japanese market is closed today, so they have a holiday. So basically, we have a nice calm atmosphere here on the Nikkei. And looking at this one right now, or should I say, looking at where it closed yesterday, it was around the 22,000 to 550 zone. But looking at the cash index right now, because the cash is still running, so we can see that we are slightly above this key barrier of resistance near the 22,700 zone, which is near the high of the 3rd of December 2018. So basically, we've managed to create a new high for this year, and yep, managed to overcome the 22,700 level, which is the highest point of December 2018. And this is what I'm talking about, the cash index right now, because if you'll take a look at that one, we are slightly above this level right here. So but if we take the current picture, excuse me, guys, if we take the current picture, then we can see that we are still trading nicely here above this tentative short-term tentative upside support line taken from the low of the 26th of August. And in a way, the index continues to drift higher, given that, like I said, the cash index is above this 22,700 zone. Then yep, we could see a further move higher, especially potentially to our targeting the 23,000 level. Or slightly below before that, we do have this little high near the 22,960 zone, which is the highest point of the 17th, or should I say the high of the 17th of October last year. So there are a bunch of good areas of resistance to keep an eye on. Of course, that's what we're going to be doing. If we're going to move slowly to the upside, we're not going to take this one straight away, for example, to the highest point of October, which is roughly around the 24,450 zone. That's a bit of a long shot, let's put it that way. But for now, we're going to aim for this 22,960 zone, or the 23,000 level in general, and then we will take it from there, because if it gets a hold up around here somewhere, we could see a bit of a correction, because like I said, the index has been quite distanced from this short-term tentative upside line, so in a way, a bit of correction could be possible, but for now, it would be difficult to talk about that correction unless we see a drop below the 22,255 zone right here, and this way we could get a little bit more comfortable with the downside in a way, we could start already considering lower levels if we see a drop below the 22,425 zone, which marks the low of the 17th of October. And this way, yep, we will slowly aim for these levels here, for this level though that I've just mentioned, the 22,255. But if that fails to withhold, then yep, further declines are possible. But again, those declines would be limited due to the upside, the short-term upside support line. And if we reach that, then we'll take it from there. So if, in a way, if I'm going to put an arrow here for our future reference, so basically this is where you could start looking at the downside. And if we see a drop below the 22,425 zone, then yes, be very careful around here. But if we slide below the 22,255, that this kind of in a way could provide a bit of more confirmation for the decline here. So keep your eyes on this one. And given that it's currently the cash index is above the 22,700 zone, of course it increases the chances for a further move higher. Don't get me wrong, we still have the full European session to go through, the US session to go through, so in a way that could get influenced as well. So unless something changes in there, for now this could in a way continue drift further north. So keep your eyes on this one. Brent oil. It's currently stuck, so it's not that much exciting, but still we're keeping a close eye on it. And in a way, you can see that it tried to push higher on the 18th of October, but failed to move above its 200 EMA on the 4-hour chart. Now, also, in order for us, let's say, to get comfortable with either of the directions, well, in order to, let's say, get comfortable with the upside, ideally we would like to see a push above the 60.66 zone, and then we will aim for the 62.70 area. We're not going to drag this one too much to the upside yet. We just want to see this commodity exiting this little kind of range here, which is roughly between the 60.66 on the upside and the 58.25 zone on the downside. So in a way, if we get a drop below this 58.25 area, then we could consider a possible move lower here towards the 57.36-35 zone. But if that is just seen as a temporary obstacle here, a slightly better area of support could be seen around here, near the 56.13-15 zone, which is the low of the 3rd of October. So keep your eyes on this one. But for now, probably, like I said, we're going to remain neutral and just continue observing the price action inside this little range here. So keep your eyes on that one. Jumping into a few pairs now very quickly, and AUDCHF. Now, I talked about this one recently, and basically what I was talking about here is that you need to keep an eye on some of these key areas of resistance and support. So in a way, for the upside, you can see that the pair is knocking on the door of the 0.6792 zone, and in order for us to get comfortable with slightly higher levels, a push above this level, and ideally maybe a close of a daily chart, a daily candle above this level could do the trick here for more buyers, and we could aim for the 0.6826 or even the 0.6845 zone, which is the highest point of the of September. So for now, guys, keep your eyes on that one. Quite interesting developments happening here. But don't get me wrong, if it struggles to push above this, in a way, this could start declining. We could see maybe a move back down towards this upside support line taken from the low of the 25th of August. And of course, don't get me wrong, if we do see something like this, then we could be getting ourselves a nice ascending triangle formation here. But of course, that's a bit too early to talk about that. In order to consider such a formation here, such a pattern, we would need to see a move lower, a test of this upside line, and then a rebound and a push back to the upside. So that's why, guys, for now, this is just an idea. For now, keep your eyes on this barrier instead. If we get a nice daily close above this, above the 0.6792 area, then this would confirm a forthcoming higher high, and we could target slightly higher levels here. And in terms of the downside, well, again, like I said, if this barrier holds, yes, of course, we could see a slide lower. The only thing is that here, if you're trying to capture maybe this little move lower here, it would be a bit of a difficult one to do, because in a way, yes, we could maybe consider a possible level here, the 0.6756, 55 zone. A drop below this could, in a way, yes, increase the chances for a test of the this upside line. The only problem here is, and we've seen this happening many times, where in such situations the pair, for example, drops lower somewhere around here, doesn't even test the upside line, and then reverses to the upside again. So that's why, guys, for now, probably wait in terms of the downside, probably wait for a drop below the 0.6691 zone. This way there would be more confirmation for the downside, and we could see this one drifting further south. But again, for now, we're closer to this key barrier, this potential breakout barrier, but we need to see a nice daily close above this. NZDUSD. Now, also quite interesting developments here. So, I mean, and the New Zealand dollar continues to accelerate. The only thing is that looking at this NZDUSD, we can see that the pair is approaching its key area of resistance around the 0.6445 zone. Now, again, we do have this little peak here as well. We could consider that. So that's around the 0.6451. So in a way, that's why I'm saying consider this area as a potential resistance zone. And in a way, it will be quite interesting to see if it struggles to push above it, then we could finally maybe see this little correction, this long-awaited kind of deeper correction to the downside. This is where probably the bears could enjoy the moment a little bit, at least in the short run. We could see the pair drifting back down, and we'll of course take it from there, see how it's performing around here. But if in order to, for us, let's say, to get excited a bit, get a bit more excited about the downside, a drop below the 0.634950 zone, approximately around here, guys. This is what we would need in order to consider, let's say, slightly lower levels, because if we see a drop below this level, then we could, oh, there we go. I need to get rid of this, guys. Too much copying here. So if we see a drop below the 0.6350 zone, then this would also place the rate below its 200 EMA here on the 4-hour chart, and we could see this as a bit of a negative here, and yep, a further slide could be possible. But again, don't get me wrong, for now this could be just a scenario to consider later on, but the main scenario right now is that if it struggles to push above this 0.644550 territory, this resistance area, we may see a bit of a correction to the downside. Now, if the pair kind of remains, let's say, somewhere above the 0.6382 zone, this could in a way lead towards a potential rebound here, and another push higher. The only thing is for us probably now at this point in time to be a little bit more on the safe side, a push above the 0.6450 zone, and ideally a nice good daily close above this level in a way could do the trick here, and we could aim for the 0.65 zone, and then we'll take it from there. For now, we're going to go step by step. And like I said, we'll consider this scenario as our main one for now. Let's keep an eye on this one. GBPJPY. So GBPJPY, yesterday it moved a little bit higher again, and this morning we're seeing the pair stalling not far from the highest point of last week, near the 141.51 zone. In a way, this is going to be the level for us to get comfortable with higher levels, because a nice good push above it would confirm a forthcoming higher high, and the pair could in a way start moving towards towards slightly higher levels. In a way, initially we could aim for this little area of resistance, which previously acted as support, and this could be our nice good target here near the 143.75 zone. So as I said, a nice good pop above the 141.50, 51 zone here, basically the highest point of last week, could in a way do the trick here for more buyers, and we could see the pair accelerating towards this area right here near the 143.75. That this could be our better target. In terms of today, and again, I'll probably correct myself here a little bit. This level here could be a bit of a, let's say, over a few days. If this decides to rise further, this could be reached either today or tomorrow, or if, like I said, in the scenario, if we get a push above this 141.51 zone. Because in a way, if it travels higher today, it could get a hold up near its R2, which is around the 142.35 zone, roughly around there, and this is where the holdup could occur. But if that continues to push further above, then yep, we will aim for that 143.75 zone. So keep your eyes on this one. In terms of the downside, now previously I talked about this level here being the area for us for further declines. Yes, we'll still consider that area. Excuse me. But from the very short term perspective, in order not to miss, let's say, any of the moves here lower, I initially will start looking at slightly lower areas around here, near the 139.7675 zone. A nice good drop below this would also place the, of course, it would already place the pair below its 21 EMA on the 4-hour chart, and we could in a way aim for a bit of correction here to the downside. Now I'm talking about the correction because we're still kind of climbing higher. We're still trading above this nice tentative, short-term tentative upside support line taken from the, let me just quickly adjust this. There we go. Taken from the low of the 3rd of September. And of course, that's why any kind of move lower here up until this one could be still seen as a large correction. So as part of a correction, let's put it that way. But again, for now, guys, in terms of the from the short-term perspective, if we see a drop below this 139.76 zone, we will start looking at slightly lower areas. We'll be very careful. We'll have our stop loss in place just in case this suddenly reverses back to the upside sharply. And don't get me wrong, you do understand that the Brexit saga is still ongoing, and we do have a withdrawal agreement bill vote today at 7 o'clock UK time. Or should I say 1900 UK time. And that's why, guys, be very careful there. Be very careful around it. Also, you can have a read through our morning analysis is currently getting produced, so you can have a look at that one later on today. So just to kind of see what's happening here right now with Brexit. But coming back to this pair, again, I'll repeat myself. A drop below the 139.7675 zone could in a way open the path towards slightly lower areas. We could aim for this 137.90 zone, which previously acted as a fantastic area of resistance here on the 11th of October, but this time could take the role of a nice support, but only on a drop below the 139.76 zone. Jumping into our last pair, and that's euro dollar. So this continues to kind of move around here, the same level where it was yesterday. So I talked about this one yesterday as well. So in my morning video and my tea time as well, I was telling you guys that we were considering here a possible correction a little bit here to the downside. So we did have a move higher, but it failed to push above last week's high near the 1.1183, and it retraced back to the downside. So in a way, we're still kind of keeping this idea in our heads that we could see a bit of a slide again. We could see a move lower, a bit of correction correction here to the downside, but if it continues to trade above this 1.1110 zone, then we could see another leg of buying and potentially moving back towards the high of last week here near this 1.1183. But if that fails to withhold, now this would confirm a forthcoming higher high, and we could target the our other slightly better target near the 1.1250 zone. So, and that's basically the highest point of August this year. So, but again, for now, this is the main scenario that we're keeping an eye on. If it suddenly drops below the 1.1110, then we will aim for this short-term upside support line taken from the low of the 1st of October, and then we'll take it from there, see what he wants to do after. If it wants to break it, good news for the bears, but if it stays above it, then the bulls still have enough hope, or should I say just still have hope that this could reverse back to the upside again. So keep your eyes on this one. Okay guys, I'll have to wrap it up here right now. I'll kind of went a little bit over my time, but thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, as always, that's 13:15 GMT. Again, we don't have a very eventful day today in terms of economic data, so the main kind of interesting thing that we could keep an eye on will be, of course, Brexit and its development in today's vote. So that's why, guys, be very careful with the pound. If you're scalping it, then well, in general, whatever you're doing with it, have your stop loss in place, guys. So okay, thank you very much, guys, and I'll see you later on in my traders tea time. As I said, 13:15 GMT. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.